Hello friends, I just did the unthinkable. I went for a jog, but the unthinkable bit is that I ran past a few people, and for the record, I kept the distance. But I went out, got some vitamin D, fresh air. My hair's still a bit wet. I haven't had a shower, so thank God for the isolation. That, however, is going to be the topic of my next video. Now, Australian property. Since Australian property is not something that we can take a look at every day and see what the price is every minute, Monday to Friday, like Australian Stock Exchange, for example, we can tell what every share is, what every trade is, and the averages, and some of the just random stocks that we can have a look at, like Origin Energy. It's gone from $8.59, about, 8.78, let's say. It's the top, down to $3.80. Imagine if we could trade property daily like this very easily, what that would be now. Since we know that the averages have gone down by about 30%, what do you think the property market at the moment would be, again, if we traded it day to day? Just so I didn't pick a stock that's actually dropped a lot. Santos, it's a huge oil and gas producer. Price is $3.41. The peak in the last 12 months, let's just call it, was about nearly $9. So it's not even $3.50 now. So it's gone down. So again, what would the property be? All right, just one more, and that's the ASX 200. So 200 largest companies in Australia. Again, the peak was above 7,000, 7,100 roughly, and we had a bit of a bounce, but then it went down on Friday. So it's 4,842 roughly. So it's gone down probably what 30% by now. So again, what would the property do if we traded it daily? I actually got a call from one of the agents. The property I inspected was in Taramara, and they obviously got my details because you can't even inspect the property without them taking your details. And I got a call from a real estate agent just saying, "Hey, how's it going? Whatever." I had to be a bit of a smart ass, and I said, "It must be a quiet day in the office for you today." He said, "Yeah, look." I said, "Look, I'm not interested." But he said, "Do you want me?" He said this. "Do you want me to give you a call when the property's back and it gets away again?" And I said, "Look, I personally don't think it's going to get away from us again, but thank you very much. I give you a call." So I was being polite. Okay, I do have an example of a property I mentioned in my previous, or a couple of my previous videos, that I was going to bring up. I was talking to my friend. She's a real estate agent, and she's selling this property. It's price guide, $1.3 million. It's a 3-bedroom apartment in Pitt Street, Sydney, a 2-bathroom, 2-garage. That's, I think, very unusual. I mean, if you were to buy that, you could rent it out for like $1,000 plus you could probably get those garage spaces for about $100 each a week. This is all per week. So this is what the property looks like. But the story is much more interesting than the property. And while I'm showing you this, I may as well tell you the story because I don't want to waste your precious time, because I know mine is precious. I have lots of things to do. It is Sunday, 29th of March, 2020. It's been on the market for a little while. She gets a call, and an interested buyer, very interested buyer, says, "Look, I'm interested. So let's talk about price." Long story short, they agree on 1.125. 1.125, and again, the price guide is 1.3. And a friend of mine thinks, I have to sell. She's a real estate agent, and she says the property is tanking. I said, "How do you know?" I mean, I like some numbers. I don't like anecdotes like I'm giving you one right now. But I'd like to hear a little bit more as to what's going on. I know the inspections are limited, and everything's been, put to a pretty much complete halt. So it is not a good time to gauge property because again, we can't, nothing's selling, the volume's down. So, but if it was selling and somebody just did agree to pay a little bit over $1.1 million for this, see, 2-garage, that's actually pretty good. And that's the building there in Pitt Street, Sydney, downtown city, Sydney. Um, so they agreed on just over 1.1. Only the next day for this potential buyer obviously hadn't put the deposit down to call back and say, no, we are pulling out. We're pulling the plug. We're not going to go ahead with it. They didn't even put a new offer. Again, this is totally anecdotal. This is a 151 square meter apartment. It's actually, I think it's almost getting to not a bargain stage, but a fair value. Think about this though. It's very interesting because I kept on reading and it says strata fee is approximately $3,174 per quarter. Over $3,000 per quarter. Council fee is approximately $272 per quarter, and water fee, I don't think that includes the usage. So water per quarter is $178. So that comes to be nearly $14,500 per year. This is so if you just brought $1.1 million cash and you paid it yourself, it would still cost you at least, well, it actually cost you more than $14,500 a year just in maintenance. This again doesn't include all the other bills, including the water usage, obviously electricity that everybody pays, internet and all that. But just bare minimum actually has to be more than that because you have to use water. Would be 4,500. I divided this by 52 weeks because in Australia we like to think weekly rents. So this is not a rent, this is yours. You paid it off. You already shoved more than $1 million into it. And just to be living there, to be maintaining it, the bare minimum is almost $300, $278 per week. Which is a bit crazy if you ask me. Now, this property is not the best example as far as how good it is to buy property, because obviously these strata fees wouldn't be there if you bought a house, but you'd arguably be paying more than $1 million for a house, or maybe less. You could maybe probably find a house in Sydney, outer suburbs, really old house, and maybe a small block of land. But you couldn't live in it. But maybe, I don't know, $500,000-$600,000, absolute bare minimum. Again, you couldn't live in it, and you'd be so far away from everything that I don't know, you'd have to be working from home, which kind of works now. Or you'd need $1.5 million, the prices that we know prior to the Karamba. You would need that much. What was interesting, though, in this anecdote, as I mentioned, is that a friend of mine, who is the real estate agent who's trying to sell this unit, said that properties tanked. And I just didn't know where she was getting that from. But then, silly me, I mean, she is in the property business. She knows how much is selling, what's selling, and how much is selling for. So, should you, where will the property go? Well, I don't know. Maybe we should consult our friend Stock Exchange to see where it might be going. I mean, you'd be mad to be shoving all this money in. It doesn't mean that people are still not buying and paying the almost said pre-GFC prices, but pre-Karamba prices. But this will just have to tank. And that's not because I believe it. That's because, let's think about this, the government, when property prices, this is something that Damien Klassen actually mentioned, a very good point, is that when the property prices dropped, so the point that he made in that video that I shared last, and I'll also include it in the description of this one, is that, so that's Damien, he said that, how property prices dropped in 2008 and 9 and beyond. I don't know where the bottom exactly was, but, shortly after the GFC, enough after that is that, so they dropped in the United States, in Ireland, in Israel, in Spain, some of the very good examples of it. Now, it's not that the government said, you know what, we're not going to bail you out. We're not going to include another stimulus, and we're not going to pull out all the stops. In fact, they pulled out all the stops, yet the property there dropped by, I think Ireland, for example, was 50%. I could be wrong, but it wasn't less than 50%. It might have been 60%. But all right, let's keep it at 50%, so halved. And this is after the government has actually pulled out all the stops. Yes, the reasons were different. There was a liquidity crisis. It wasn't the Karamba. But you know what? This is bigger, because one thing is liquidity drying up. Another thing is actually, having this situation where not just the liquidity dries up, but the actual economy contracts, because they've actually shut the economy down. They've actually shut it down. So it's worse than that. In the past, they just didn't have these numbers, the dollars to lend to people to go and buy these houses. Now, people actually will be losing their jobs. It's super serious at the moment. So, and the government's going to continue to try and manipulate and stimulate this housing. And if you think that that's the thing that's going to save it, again, United States, Ireland, Spain, you know, Israel, and a few other countries around the world that were a really good example of this, they did exactly the same. The governments threw everything at the houses and couldn't save it. So, I think I made my point. I think you get my drift as to where I think the prices are going. Looks like my prediction that from 2020, somewhere from January, it'll start a decline. It may not be as fast as this, right? And it won't be as evident and clear cut as this, but 40% is just going to bring us back to the fair value of the houses. We do know, however, what happens with anything, any asset class, overshoots and undershoots. So there's no reason for them not to overshoot, undershoot. So if the 40% is down to the normal value or fair value, then we could see 50 or 60% down. But something major, even bigger than this, will have to happen. We're probably not there yet, but I wouldn't put it past them, if you know what I mean.